Good afternoon, everybody, and thank you for joining us today for Fundera's live Q&A session on Paycheck Protection Program loans. As a reminder, we host these live Q&A sessions every Tuesday and Thursday to keep you informed about any updates to the Paycheck Protection Program and PPP loan forgiveness. After we provide any updates to the program, you'll have a chance to ask our internal loan forgiveness expert and Senior Director of Finance, Justin Ridgely, any questions you may have. I'm Shannon Smith, part of Fundera's webinar team, and will be hosting this webinar alongside Justin. You can submit any questions you have ahead of time using the Google form we send in follow-up emails. You can also submit your questions during this webinar by using the Zoom Q&A box. If there are any questions we don't have time to answer today, you can find our team on Twitter or email support@fundera.com. We'll also include any questions we don't get to today in the next session, which will be next Tuesday at 1 p.m. ET. As a quick reminder, we do have another webinar today about SBA 7A loans happening in 1 hour. If you're interested in learning more, you can sign up through the registration link, which we'll drop in the chat here. The last thing I want to highlight is that we'll send everyone a recording of this webinar with additional resources in our follow-up email today. With that said, I'm going to hand things over to Justin, who will provide the latest updates about the Paycheck Protection Program before we get into questions.
Thanks, Shannon. Just a quick mic check. Can you hear me all right?
Yep, sounds good.
Okay, thanks. So no big updates today. Just one small update that mainly is a repeat of the update I gave on Tuesday. But after the Paycheck Protection Program Flexibility Act was passed last week, we've been kind of waiting to see what the SBA is going to do in terms of detailed guidance. Yesterday we got a little bit more clear guidance on the following up on SBA Administrator Jovita Carranza's statement I think on Tuesday, basically just clarifying some of the changes that were made in this law that was passed and signed last week. So just a quick rundown of what these were again for people who may not have joined the last webinar. The covered period is a term that is used in a couple different ways in PPP, but originally it was the covered period was February 15th through June 30th of this year, and now extends from February 15th to December 31st. You still have, for those who got their loans before June 5th, you can either use an 8-week period or the 24-week period, but that's a little bit different than this kind of date, which basically covers what the length of the program is. Before it was only meant to run through June 30th, and you had to spend it all before then, and now it kind of runs through December 31st. The other kind of main change that was made was reducing the threshold of payroll expenses from 75% to 60% to achieve full forgiveness. And we've got a lot of questions about this. I think there's some confusion generally, and that I've seen on Twitter and other places about how this works. And what it means is that if you don't spend 60% of your loan on payroll costs, you can still get a proportional percentage forgiven, but you can't get the whole thing forgiven in any case. You have to kind of achieve this 60% split. So the way that works is in the sub-bullet there, essentially, you have to take the amount you do spend on payroll, divide that by 60%, and that's your maximum forgiveness amount. So you could either, this could work out a couple of ways where, you get a $100,000 loan and over 24 weeks, you're able to spend, 100,000 of it on payroll and 20,000 of it on rent and, 10,000 on utilities. Whereas then you've actually spent, the loan and more. You could apply for it on the basis of 100% payroll, or you could apply for it on the basis of this 60-40 split. It's kind of whatever is easiest for documentation. But if you, only achieve, 50% of your costs on payroll, like you only were able to spend that even over 24 weeks, then you're simply not going to be able to get the full amount of forgiveness, regardless of what you spend the other, whatever your other cost bucket is. Like the 40% is not a 40% on its own. It's a 40% only when 60% is achieved by payroll costs. So it's somewhat confusing, but just know that you have to get to 60% to get the loan fully forgiven. hopefully with 24 weeks, that shouldn't be a problem for most employers and business owners. The other two clarifications on here just were that for all loans after June 5th, which was when the law was signed, the maturity of the loan is automatically 5 years instead of 2. And then lenders have the option to change that with their borrowers for loans made before that time. But again, hopefully everyone will get full forgiveness and won't have to worry about the loan aspect of this. Then the other portion that was clarified was around when any principal or interest payments would have to be made if you don't get the whole thing forgiven. And that essentially is at the earlier of when the lender receives the forgiveness funds. You apply, they get approval, they get the funds from the SBA, that date, or October 10th, 2021. So those are the main changes. Again, the 60-40 in the covered period, not new in the last week at least, but worth mentioning again. So with that, Shannon, I think we can go straight into Q&A.
Thanks for going over that, Justin. Now we'll get started with the Q&A. Please feel free to submit any questions you have using the Zoom Q&A box. So our first question is about applying for a PPP loan. This person wants to know, how do I apply for a PPP loan and how much will I get being the only employee of my S Corp?
Well, you can apply for a PPP loan by going to a bank that you have a relationship with. A lot of banks have ended up doing these PPP loans over the past few months. You can also go to fundera.com/PPP and we have our application there, and we can route you to one of our lenders that we work with and get you done pretty quickly. The amount that as an S Corp you could potentially get is based on essentially what you earned in 2019, or kind of either use calendar year 2019 or the kind of the last 12 months calculation. So I think it very much depends what you're going to get on kind of how much your business made last year and how much you made as part of that. There are still over 100 billion in funds in the program, so I encourage anyone who hasn't applied and wants to apply to go do so soon.
Great, thanks. Next up, we have a question about the timeline extension. This person asks, since the covered period is extending to 12/31, can I have just one of 5 FTE back on June 1st and all come back later in August, as long as I can meet the 60-40 threshold at the end of the covered period?
Yes, this was somewhat the point of extending the period out. It's that, for a lot of businesses, there's going to be no way for them to really get back to a full level of employment that they had to compare against previously by the end of June. Depending on what state you're in or what regulations you have in the area, you may not be able to open back up then. So in that case, the question says, okay, can I meet this 60-40? And then if I bring everyone back, later in October, then yes, you'd still be, hopefully within your 24-week period there. And you'd have brought them back, before December 31st. And then if you spend 60% on payroll, then you'd be good to go and you'd be eligible for full forgiveness, provided that you also didn't reduce anyone's, wages or salaries below the threshold.
Great. Next up, we have a question about the PPP period. If funds are spent after week 15, for example, does the FTE period ending period calculations end at the end of 15 weeks, or must you go to the end of the 24-week period?
This is something where, I hope the SBA clarifies, because, if you think about just like, mechanically, I don't know the answer to that question right now. What I hope they clarify it as is, say I've spent my PPP money by week 15, I'm back to full employment. I don't know what's going to happen in the next 9 weeks. So I want to apply now based on where I am at this point in time. That seems to me to be reasonable. And it would seem odd for, a business to spend all the PPP money faster than 24 weeks and then have to, hold the same exact level of employment, through the end of the year, even though the funds had already been spent. So I think that's a tough one. I'm hoping that they say, that you can kind of bump the comparison date up to when you apply for forgiveness or something like that. But right now we haven't heard any clarification on that.
So we have another question about the timeline, and it's, do the weeks of payroll spending have to be consecutive, or can you pick the weeks you want to use for forgiveness? For example, using weeks 1 through 4 and weeks 7 to 15.
As far as the guidance exists now, there is no stipulation about when you have to spend the money in terms of which weeks you have to pay it out in. It's defined as the whole period. Before, when the 8 weeks was in place, you had to spend it in those kind of consecutively, or else you'd have kind of no hope of reaching the amount you need to get forgiven, right? But with 24 weeks, it's a lot longer. So conceivably, when you submit, you can prove however you want. Like, you could show whatever weeks you want, I guess, but as long as you get to the total number that you would need for that payroll amount, I think it probably would look more normal if you submitted, consecutive weeks, even if it wasn't everybody. But it shouldn't really matter, which weeks you choose. $1 spent on payroll in the 24 weeks in one period is the same as the next. Like I said, there's been no rules about, you have to spread this evenly over time. Just generally, I think it's easier for most people to do so.
As a follow-up, someone would like to clarify whether the forgiveness percentage rule of 60% and 40% is based on the total amount of the loan at the end of the 24 weeks or each payroll period.
It's based on the total amount of the loan when the loan is issued. So whatever your loan amount was that you received, that's what the 60% is. So again, if it's a $100,000 loan, you have to spend 60% of it, or $60,000 over 24 weeks on payroll to achieve full forgiveness. You can still spend less than 60% and get mostly forgiven, but you can't get fully forgiven.
Great. And I'm seeing a few questions just about general clarity over PPP loan forgiveness and what's forgivable. Do you mind doing a basic review of what's the new rules are and what forgivable expenses there are?
Sure. Let me just go to the slide. So the main thing that's forgivable is payroll costs. Payroll costs include, mainly kind of two main things. One's cash compensation, and then there's the non-cash payroll costs. Cash compensation is, salary, hourly wages, tips, sales commissions, paid leave of any kind, except for leave covered by the FFCRA, allowances even for dismissal or separation, otherwise known as severance, hazard pay, bonuses. And so that is kind of what falls into that cash bucket, and kind of usually will be the main component of forgiveness. Now, there are a few non-cash payroll costs: health insurance, retirement contributions, state and local taxes. The health and retirement one, we get a lot of questions about this because it's pretty straightforward. If you're an employer that has a group health plan, in other words, the employee pays something or maybe nothing, but the employer is paying for healthcare, at least some in whole or in part. Those costs are forgivable and part of this payroll. What's not is, the employee's payment into a healthcare plan. And the one place we don't have a lot of clarity, but so far has not been included in this is, if you're a sole prop or an escort maybe, and you're paying for your own health insurance, that so far has not been listed as a forgivable, inclusion here. It's quite unfair in my personal opinion, but there has been no clarification on this, and something maybe the SBA will change, but did not do so far. So that's what's included. State and local taxes also are not, payroll taxes that you pay to the federal government or things, in the Social Security, Medicare, et cetera. These are essentially state and local taxes fully paid by the employer, not deducted from the paycheck of the employee. And usually these are things like, state unemployment insurance tax or something like that. For the other expenses that you're allowed to, get forgiven, you can do mortgage payments, and these are interest payments, not principal payments. Rent, utilities consisting of electricity, gas, water, transportation, telephone, or internet. Interest payments on debt obligations that were incurred before February 15th. So if you had some sort of loan, that you had taken out maybe in January of this year or last year, it's not a mortgage. You can also pay the interest on that loan, but you cannot pay the principal. Now, if you think about it this way, if I've got, $2 in my bank account and I pay one on interest and one on principal, then the only one I would include for forgiveness is the one I did on interest. But a dollar is a dollar, so paying your interest with PPP money still would maybe let you use other funds to pay down principal more quickly. You can also refinance your SBA EIDL loan. So these are all the uses that are allowed. Again, these is the 60, you have to use at least 60% on the payroll side of things to get it fully forgiven.
Great, thanks for doing that. This next question is from someone who wants to clarify whether forgiveness is given regardless of the institution that lends the money, or if there are specific rules or institutions that don't give forgiveness.
Simply put, no, there are no differences in the institution in terms of whether they are allowed to offer forgiveness or not. Every bank is legally obligated to help you get your loan forgiven. What may differ between lenders is the process you must go through to get your loan forgiven. So, similar to how, well, I guess what Fundera saw, when we worked with a few different lenders in the application processes, some lenders had, different forms of application. Some were, online. They had slightly different fields. Some asked for things that others didn't, like driver's license copies and things like that. And, we'll see how this kind of works out for forgiveness, but it wouldn't surprise me at all that, some lenders ask for these 12 documents and other lenders are a bit more strict and ask for 20, types of documents. And it's very much a cover your ass kind of situation for the banks, in my opinion. And I think you'll have to wait and see what your bank that you got the loan from does in terms of forgiveness. But again, they are legally obligated to process forgiveness for you.
Great. We also have a few questions coming in asking about clarity on whether 100% can be spent on payroll and forgiven, or if there is a maximum limit on that.
There is no maximum. In fact, I would probably recommend you spend 100% on payroll because it'll make your documentation easier. Since it's such a long period, and you got a loan based on 2.5 months of your average monthly payroll, and if you've got 8 months to use this, then 6 months to use this, then you should be able to theoretically spend all of it on payroll, and then you wouldn't have to submit records for your rent payments or anything else. You could just submit your payroll documentation for 100% and get it forgiven that way. I think that that's something that I would recommend doing. It'll make your life a little easier. But again, the 60% is the minimum you have to do to get full forgiveness, and there is no maximum.
Great. This next question is specifically about self-employed PPP recipients. And this person wants to know, how does the new rule affect an independent contractor with no employees? And specifically, are self-employed PPP recipients still limited to 8 weeks of compensation, or has that been expanded to comply with the new 24-week window?
So this hasn't been explicitly clarified yet. As the question asks, the way it worked previously is when there was 8 weeks, if you were self-employed, the most you could pay yourself was the equivalent of 8 weeks of what you made in 2019, if that was below 100,000 total. And if you made above 100,000 in total in 2019, you were allowed to pay yourself only the 8-week equivalent of 100,000, which was 15,385. It would make sense, with the 24 weeks to, be able to pay yourself up to the maximum amount of the PPP loan, but over a greater, calculated on a 24-week basis, which I think would come out to something around $43,000. And so, I hope that that's clarified, because it would seem odd to base the maximum on a 8-week convention when it's now been changed to 24 weeks. But I think we'll have to wait for the new forgiveness application, which should hopefully come out soon, to get that clarified. But again, my hunch is that that maximum that you can pay yourself will go up. Otherwise, it would seem very punitive, towards self-employed individuals.
This next question is from a person who has received their PPP loan, but just had someone offer to buy their company. They want to know if they can pay back any unused portion and still have forgiveness.
So if you pay back the unused portion, then you can still apply for the forgiveness on the remainder. There's nothing stopping you from doing that. It would seem like if you're going to be acquired, that you should probably quickly submit the forgiveness on what you've spent so far, and then just pay back the rest, and then the acquirer can get the benefit of that. But there hasn't really been any guidance yet on change of control scenarios for businesses, or if a business, God forbid, goes out of business. We haven't really received any guidance on that yet. So, I'm not sure how it could be assumed by the acquiring entity in that case. So you probably would want to pay back what you don't need, and quickly try to get forgiveness on the remaining portion.
This next question is, for a two-person LLC, is the partner distribution taxable as income?
That's a that's a bit of a tax question. Yes, theoretically, yeah, it's taxable on your personal tax return, but not the business tax return, as far as I know. But again, I'm not a CPA. Yeah, it's a little off topic, but sure.
Great. This next question is from a person who wants to know, for reporting FTEs, do they have to report bi-weekly if this is how they run payroll?
No, I think what basically is this. It's the FTE. Potential reduction or forgiveness is going to be looked at the end of the period, and whether that's going to be 12/31, or maybe you apply for forgiveness earlier because you used your funds, then probably on that date. But it doesn't really, I guess, matter. What frequency your payroll cycle is.
This next question is about how to apply for forgiveness and when. This person wants to know, if using the 8-week option that ends on or before June 30th, can you apply for forgiveness soon after June 30th? Or can you wait until the year-end deadline if you want to, even though you're using the 8-week period?
The SBA has not issued guidance on when, if you use the 8-week period, you have to apply by, but the rule is you have 10 months to apply for forgiveness. So theoretically, yeah, you could wait till the end of the year. That would be no problem. I think that if you do use the 8-week period, you're going to be probably a slightly better off applying earlier, because most people will probably wait till the end of the year to apply for forgiveness. And to the extent that you could get in while the banks aren't as busy now, as soon as you kind of finish, if that's your plan, then you might be able to kind of get in there earlier and avoid getting caught in a massive, backlog of forgiveness applications that might occur in December and January.
Thanks. This next question is from somebody who wants to know if utilities include any monthly billed or yearly billed expenses included on your Schedule C, such as home office, cell phone, internet fees.
So if you're a self-employed individual and you've got home office charges, or things of that nature, you're only going to be allowed to kind of use the standard this is kind of loose guidance so far. It hasn't been explicit by the SBA, but I would highly recommend, using kind of the same convention you use for your taxes. So, the way it works for like a home office is, if you have X mortgage payment and, your home office is 20% of your house size or something, then, 20% of that mortgage payment can be applied as a home office kind of rent charge, right? Or mortgage charge. I would use the same type of standard for PPP. If this is you're self-employed and you're actually putting these expenses onto your, filing for tax purposes, then I think that's safe to use. I also think, there's a piece in there about utilities. I think, utilities, again, need to be something that you're specifically allocating towards the business if you're self-employed, and shouldn't just be like, I work at home, so 100% of my electric bill is going to be forgiven. That's not really how that works for tax purposes, and it won't be how it works for PPP, I think. Again, there hasn't been explicit guidance on you to use that standard, but everything I've read from different CPAs that are following this seems to say that use the same standard you would when you file your taxes for the business.
This next question is from a person who says, I got approved for PPP for my S Corp, which I received a W-2 in 2019. However, I also had self-employment income in 2019. Can I apply for PPP as a sole proprietor as well?
If you were paid, via 1099, I guess, as a contractor or self-employed individual, and not through the S Corp, meaning, the S Corp wasn't paid, you personally were paid, then theoretically, yes, you could, because that's, if you have two methods you earn income by, one is, self-employed contractor, and one is, you have another business that you file as an S Corp, and that's a separate thing, then theoretically, yes, you could. There's no restriction against doing it for multiple businesses you own, unless you're a lot larger, and then this affiliation rule comes into play, but that's for like 500 employees or so.
This next question is someone who wants clarity on if income replacement monies are all forgivable.
By income replacement, I assume that means a self-employed individual paying themselves. As I said before, right now we don't know for sure what is going to happen with the cap on what you can pay yourself as a self-employed individual. Kind of, if I'm looking at the notes I have up right now, they still have this convention listed in the application, haven't changed this yet. The hope is that, yes, you'll be able to use more than 15,385, or use 24 weeks of what you made in 2019 instead of just the 8 weeks. But again, we haven't heard confirmation from the SBA on that yet, and hope they address this soon.
Great. We only have time for a few more questions, maybe just one. We do have a few people just asking for clarity on whether payroll taxes are forgivable and workers' comp.
So the only taxes that you can get forgiven are state and local taxes paid solely by the employer or the business. It's usually state unemployment or something like that, or a transportation tax. No other payroll taxes are included in the payroll number for forgiveness, and you won't be able to include that. So no, payroll taxes is mostly a no. What was the other one you mentioned, Shannon? Sorry.
So we do have one about whether workers' comp.
Workers' comp. Okay, so workers' comp is one that's a bit of a gray area right now, as in some states, or not even that, for some professions, there is a workers' comp portion that's paid on behalf of the employee so that they can work in maybe an industry like construction or something like that, and is legally mandated. I have seen loans like that, and when the applications were being put in back in May, where people were including this their loan amount and getting it approved, but workers' comp has never specifically been called out by the SBA, so I think that's probably on their list of things to hopefully clarify. And for now, I would say don't include it. If with the period being so long now, you should be able to meet the get full forgiveness and use all these funds on just payroll, even without kind of these maybe more gray area expense items, unless your payroll has been reduced significantly. It's just such a long time to be able to use the funds. And I would encourage people to just try to think about it as over a longer period of time. If you were going to get close to spending it all in 8 weeks, then you should definitely be able to spend it all on these more vanilla uses, over a longer 24-week period.
Great. Thanks for answering those questions, Justin. Unfortunately, we are coming up on time, but for any questions we didn't get to, we'll record them for next week, and you can also submit any other questions using the Google form, which we'll provide in the follow-up email. You can also reach out to our team on Twitter or support@fundera.com in the meantime. Please remember to keep an eye out for the webinar recap email today, which will include the recording and slides from the presentation, as well as additional resources from our blog. Thank you again to everyone who joined us today. We hope to see you again on Tuesday to go over any additional updates and answer more of your questions.